Hello and welcome to Ashworth Wealth Weekly Market Update. I found this week's market update to be of particular interest uh, just because it shows the importance of not looking at the big headlines that come out in the news all the time. Uh, Unfortunately, that's what we're programmed to do. And so you'll see big stock market swings based off of headlines when if you look a little deeper into what is actually happening, it starts to reveal a different story. So let me give you an example of this. A few weeks ago, the stock market took a rather large dive. It was actually the last time that I recorded one of these. The Dow was down over 1,000 points. S&P was down. It was the biggest down day in quite some time. And it was in reaction to the jobless claims report that came out, where it had spiked quite dramatically. So, of course, we as investors and people in general reacted to that, thinking that the economy was falling apart, and the stock market took a dip as well. However, if you take a deeper dive into the data, you can see that in reality, most of those spikes in jobless claims, initial jobless claims, were in two states, Texas and Michigan. And then if you look a little closer at what was actually happening in those states, you start to see a clear picture. In Michigan, there was a couple of large temporary, keep in mind temporary, auto plant closures which would have caused people to go and file claims of unemployment. Now, those are temporary things. In Texas, you had Hurricane Beryl that came through, and that shut down a lot of places, and there's all sorts of issues that come along with hurricanes. And so there was a large spike in unemployment claims in Texas as well. However, those unemployment claims reversed themselves quite quickly because those are two temporary events, which is why the stock market didn't continue to freak out after that one initial bad day. In fact, it reversed course and bounced back. What this is pointing to is that yes, there may be a softening of the job market, but it doesn't look like a complete deterioration of the job market. It was a micro event that we took as investors, I say we collectively, that we took to be a macro event, but it wasn't. It was a micro, very isolated event. So what's the lesson to be learned from this? We live in a day and age where there is a 24/7 news cycle. You can get access to information anytime that you want it. Oftentimes more information that you want, and oftentimes it's not even good information, but we act on this information quite a bit. The important thing to remember is from an investment perspective, we always have to keep a long-term perspective. We always have to make sure that we're looking at this as a long-term play. And when we do it that way, it takes those big spikes, it takes the worry out of those big spikes, is probably the best way to say it. We're not going to go back to an age of low volatility. That's just not going to happen, not when we have, like I said, access to 24/7 news. So what we have to pay attention to is what are the larger things happening? Are we going to get dips in the stock market? Absolutely. But we're also going to get growth in the stock market. Uh, Chairman Powell does not appear to feel like this jobless claim was anything more than a blip on the radar. It looks like they're still on track to have an interest rate drop here in September. We'll know that here shortly. But right now, things just seem to be kind of plugging along. So like I said, we may end up with a softening of the job market. Does not at this time look like a complete deterioration, but there will be headlines out there that are going to look scary. So we always have to look past those headlines, pay attention to what's really happening. Sometimes the headline matches what's really happening, but oftentimes the headline's just there to get clicks. So once again, as I always say, if you have any questions, if you would like information, if you would like to take a deeper dive on any of these things, please feel free to schedule time with us. We are reaching out to many of you to try and schedule reviews right now. We're coming into a time when it's a good time to be making decisions based off of taxes and what you want your tax situation to look like this year. So please feel free to reach out. And as always, please feel free to share this information with anybody that you think it might help. So until next time, hope you're having a great week and we will be in touch soon. Thank you.